If we can identify how retail traders are going to think like that, at the very moment when smart money concepts are saying that's a mistake. That person's about to be a statistic. That's the person in the body count of this movie. It's about the body count's about to go up right now. At this moment, right now, retail body count it's about to go up because they see this. They're looking for that to unfold when you're looking for the opposite. You're sitting still when you know that the market is unfavorable. Doesn't mean you can't take a trade. Doesn't mean you couldn't get lucky if you got in there and did something. It just means that why would you want to do that? Why would you want to trade on a condition or in a condition where you're going to be more inclined to hope and pray that you're right or have regret that you even pushed the button at all versus this is the right market climate. I have everything in my favor. The market's going to be volatile. It's going to be in low resistance liquidity run conditions. It's not going to be in high resistance liquidity run conditions. That means I'm going to have everything in my favor. At the same time, retail is going to be looking for the opposite. You've checked all the boxes. That's high probability trading. And friends and family, listen. That is not an everyday instance. That is not an every session instance. It's not. It is absolutely not. So when you hear these jokers say, every day is a trading day to be profitable, and they try to entice you to do more than you should. If you're brand new, you don't know what you're doing, you don't have a model, and you don't have the ability to trade on your own steam, that means you don't care what ICT says. You don't care what any of my students are thinking. You're not looking to go onto YouTube or watch live streamers. You're not looking to subscribe to anybody's service. You're looking at your own charts and you know exactly what you're doing. That's what you want. But you may need some sense of community because it's a lonely sport. Even when you're profitable, it's lonely. That's why I was trying to get all my friends and my family members when I was younger. I was like, listen, you should do this. And it's the same thing you see with my lectures. In the beginning, if I start a new lecture series or whatever, the first video, big views, big views. That's the shiny object syndrome. And when they realize, oh, this isn't going to be easy. Oh, fuck this. Let me do something else. Those individuals that stick to it and dig into it and they learn, oh, yeah, not every day is the same. I want to be in when everything is in my favor. I'm not guaranteed that my outcome is going to be favorable. Yours isn't either. But when you do more work in trying to strategize around times of the day and times of the week and what months of the year where the market is really inclined to be favorable, when it's just going to feel so much easier than you imagined it would be, that's simply because you're executing it and navigating smooth waters. You're looking to sail your sailboat in smooth waters with a cool breeze behind you. That's pleasant. That's operating in very controlled economic climates. Doesn't mean that something can't come in there abruptly disturb it, but if you focus on trading like that, your trading is going to be fun. It's going to be far stress-free compared to, I shouldn't say stress-free. It's going to be far less stress than it would be if you were trying to trade every day just because the markets are open and you force yourself to trade through high resistance liquidity run conditions or in non-farm payroll where it tends to stay in a range bound. And every little quick sudden little movement intraday, higher or lower, you're thinking, oh, it's going to finally break out of that range. And then you discover it's not. And you look at how many times you traded and you wish you would have stopped. You wish you would have never put the first trade on. You should just listen to that old guy ICT said, don't do this. But many of you are driven by a passion to be able to go out and do something just to have one instance where you can say, I did something ICT said not to. So there it is. Because what you're really indicating is you're a contrarian. You're a fool for trying to do something like that. But ultimately, what you're trying to do is prove that you are a contrarian, but don't even realize it. And I had students like that in every group. I had individuals that would always try to go against my analysis, and it would hurt them. I took the time to do the analysis like I did on Monday. This is what I believe the market would do. That's what I was doing in private mentorship. I don't do that for them anymore. They all know how to trade. Whether they choose to believe it or not, I have already taught them. It's in the lectures, and the lectures are now on YouTube. But I would sit down and I would give them pre-week analysis. I would say, before we start trading, here's what I think is going to happen. Yada, 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 yada. This is this, that, and the other thing. This is my goal for the week. This is what I'm trying to trade for. This is how I'd frame my one shot, one kill trades. The one good setup for the week. And then we would all watch it unfold. High 90% accuracy. So you're learning how I don't need to be in there everyday trading and how you don't need to be in there everyday trading. You're not trying to romance the outcome of everything that you do as a trader. You're embracing the uncertainty. That's different. You're embracing that hard right edge where you know that you have tools and perspectives and processes, protocols that you can follow that remove the need to be right. How many times have you watched that opening gap go back to its mid gap since I now taught it to you? Very few times that it fails to do so, but more inclined to do what I said. And I can promise you, over the last 40 years, 4 decades, it's done that. Not just in the NASDAQ market, not just in ES, not just in Dow, but in currency futures, the bond market, the grain markets, the meats, the metals, all of that. Every market out there that you can measure this phenomenon, and it's there. Even if it doesn't have a separation of time like we view indices, like indices have in electronic trading hours, they stop. And they have a regular trading hours time where they stop and they restart at 6 p.m. And then we have regular trading hours starting at 9:30 a.m. It's important to have that information because that information gives you a perspective that the general public doesn't perceive. They don't see it. They may recognize there's a gap, but what do you do with that gap? See, by far and large, the average person that is aware of a gap, they think, okay, well, gaps at the opening generally like to be traded down into or up into. Okay, once it does that, then what? Well, I don't know about that, but this is what we can see. This gaps like to get filled, and the chop is real. What do you do when the gap is a premium gap? It opens higher. We trade down to fill the gap, and then we keep going lower. What does that tell you? Well, I don't know. I do. My students do. You're learning that. But you need something that's going to encourage you in the beginning. And by having something that has a 70% likelihood of panning out, why do you think I want a 75 handle or more opening range gap? What is half a 75? It's an easy 25 to 30 handle run. And that's all you need. Once you get that, you can turn your charts off and go fishing, go to the movies, take your significant other out for a date, go have lunch, go back to bed, play some Xbox and PlayStation, whatever you want to do. Go to the gym because your day's done. Think about how fast the 70% repricing to mid gap went into large range gap. How many times have you seen that happen? How many times have you seen it physically happen? Just like that. And how many of you thought to yourself, if push comes to shove, if this is all I get good at doing, how is that a failure? How is that not a clear model that could take your fucking ass right out of that job that you're worrying about every day losing and why you're not getting the raise and how much more time you had to put up with fucking Carl? This fucking guy is constantly looking over your shoulder asking, so how's that trading going? How's that Forex trading going? You ready to quit your job yet? You're gonna be a lifer like me. You know you are. Yeah, your corporate team. Your corporate team, baby. You are never getting out of here. I told you when you first told me this stuff, it's never gonna work for you. Looking at that opening range gap, understanding how it behaves, what you can do with it, will separate you from putting up with Carl's bullshit. You won't have to go and work at that asshole anymore. But you have to submit to the time to getting good at reading it, not over leveraging, but one contract, one of them traded 3 instances over a week. You get two trades, one trade. See what I did there? Approach it back to just one trade, one good trade a week. And it could be just inside that opening range gap. And you don't need to know where the draw on liquidity is right now. You have something that can feed you, put some grocery money in your pocket, pay your mortgage note, or half of it, or a portion of it. And that little tiny victory, that little tiny footing, that sure footing underneath your feet will give you the confidence and to remind you, you know what? I made the right decision doing this. Something pushed me into this pathway. It didn't happen by circumstance. It didn't happen because of, just, you know, luck. You were placed in my path for a reason. We came together for some cosmic reason. Okay. And all you need to do is give yourself the opportunity to taste it one time, following the rules. And when you do that, you'll have every bit of the confidence to lean back on that one moment, that one instance where it happened in your hands. The bug will have bitten you. You will have been infected with it. You're ICT positive now. You're infected. And you'll go in looking for these types of things, these smart money signatures, and it'll encourage you because you've tasted it. You've seen it happen in your own hands. And it'll give you confidence to go in and keep doing more and more and more. And as you find more opportunities where you follow the rules and it pans out in your favor, it rewards you for following the rules. It does not punish you for being patient. It rewards you for being patient. It rewards you for being diligent and selective and in looking for this weak-handed arm wrestling match against ill-informed people that pretend that level 2 data gives them some kind of advantage, that pretends that volume profile has some measure of importance over price. It has no importance over price. It's only showing you what's already happened. It's not telling you where it's going to go. But understanding how looking at less informed traders and how they think about the market, how they internalize what price is likely to do. And when they get sentiment driven, a gap opening higher, the public's going to eat that up and think it's bullish. And when they start to run it up a little bit higher, you're going to smile and you're going to say, I'm not buying that. That's the Judas swing. Because inside that opening range, that first 30 minutes, a Judas swing is going to form. And the gap is telling you right away where the initial draw is going to be. A gap higher, okay, you're looking for mid gap. Is there a range in there for 25 to 30 handles? You have a shoe in easy lead pipe cinch trade. All I got to do is wait for it to come down below a buy sign, balance, sell sign efficiency. If it's gap up higher, once it breaks below that, look for that gap to act as an inversion fair value gap. That's all I did Friday. That's all that was. That was not me painting a fair value gap to go long in. When the whole time of that morning I was saying I would not be buying this. I would not be buying this. I would not be buying. I told you, even if it ran up to primary buy side, I would not be in that long. Why? Because I taught you the opening range is going to be like a black hole, a vacuum that's going to pull price down into its midpoint. And how it trades to that midpoint in terms of the speed, how fast it gets there, and what does it do as soon as it hits it? Does it pierce right through it? Or does it repel back up? Or does it trade down through it and come back up and treat it as resistance, as a premium array, and then sell off even more and go for 3/4 gap closure? So we're not fooled by these assholes on social media anymore. They want to take things out of context because you have documented facts being shown to you in live stream. I'm not ambiguous. I'm telling you what I want to see, what I'd prefer to see, and where the actual PDRAs are talking, where they're saying this is what's likely to do. And if you can't see that, you're lost. You're lost and you're untrainable. You're unteachable. I can't do anything for you. But nobody should be able to listen to someone's opinion and not at least watch the live streams because that's undeniable factual proof that this is something that you can do. The concepts work. I can see it doing it. I can outline it. And you watched me push the buttons this week, buying and selling with the one contract with would be, oh, it's a hypothetical $10,000 account, over $3,800. That's 38% in one day, in one session, in 1 hour, 38%. And some of you people come up to me, I made 4%. I made 2.5%. I'm out trading you. You have no idea what you're talking about. Like, that's silly. That's fucking silly. I have students that could literally whip the shit off of anybody out there that talks the loudest that is opposing to my content. I got students. I don't even need to do anything. I say, okay, just try to do better than her right now. Try to do better than him right now. Can you do what they're doing? Because they're doing it right now and they're running circles around you. Again, they're romancing the uncertainty. They need people to support them. They need people to look up to them because they don't have any confidence in what they're doing. They have to have it externally. And I was like that when I was 20. I was absolutely like that. And I'm trying to remind you all, especially young men, don't do that. You don't need that. You're going to learn how to do this so well that it's fun when you're walking around in the grocery aisles, you're walking through the stores, and these people are looking at you and you're looking at them. You're thinking, they got to go to work tomorrow. They're probably struggling and worrying about how they're going to get their mortgage paid. They're probably worrying about how they're going to get that child, these two babies they're pushing around their stroller. They're probably wondering how they're going to get a college fund put together to pay for them to go through college. They're worrying about things that you're not going to be worrying about. That's a blessing. That's an enriched life. That's a blessed life. You don't need somebody. If you're living like that, you don't need anybody else to pat you on the back that you're doing well. You already know you're doing well. Your life is a testimony to that. And how you think, new money needs assurance and assurity given to them from external sources. New money always does that. New money always looks for instant gratification and the acceptance of other people. Anybody that makes money for the first time, whether trading, win the lottery, they get a good paying job or whatnot, they immediately want to expose themselves to stimuli outside themselves because they want a third party validation because they can't even believe where they're at either. Like they can't believe it. It happened so unexpected. They think that it's going to be stripped from them any moment. So they have to live in the moment right now. And that's why you see social media cultivate that mindset. In trading, it's the most toxic thing you can do. Because what you're doing is you're teaching yourself to believe that that's what matters most. Other people's perspective and opinions about you and what you think you can do is the only thing that really matters. What other people think that you're worth or what you're able to do is useless.